Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. So it's now 3 weeks after the market created a weekly key reversal down, and during that week the market also created over the Wednesday, Thursday and Friday a 3-day bearish stick sandwich pattern. 2 weeks ago we saw the follow-on lower to these two patterns, with prices punching down through the lowest and arguably the weakest of the three recent congestion zones, one between 91.83 to 91.56. Prices dropped down as far as below the 50% Fibonacci line of the July 22 to May 23 move at 90.29, where they seemingly have gotten somewhat stuck. In part, I think this is due to this 50% Fibonacci line, but I also would include just below the 50% Fibonacci line the flat but important extension to the lower trend line, highlighted in dark blue, of the June to August 2023 ascending triangle, currently at 87.91. This proved itself earlier this year to support that turned the market higher back in early August. In a slightly bigger picture, the October to date actions have created a small bearish descending scallop pattern. This gave a primary target down in the 92.02 zone, which has been achieved, and a secondary hard to reach target X, not X1, target X down in the 87.50 zone around the lows of August and just underneath the dark blue neckline. Just in case we do reach there, the next support below that is a small congestion band, 86.65 to 86.86, made up from the 50% Fibonacci line of the October 2020 to May 23 move at 86.86 and the April 2012 high at 86.65. Meanwhile, topside, we have the oft-mentioned congestion area between 93.95 to 96.06, with a declining medium moving average, currently 93.64, or just below it, and a slow rising long moving average, currently 94.42, still within it. Now, these two moving averages are interesting, as together with the declining short moving average, currently 93.64, they just about made up a bow tie formation the weekend before last. Now, I am the first to say that this bow tie formation is not perfect. For example, the long moving average is still heading slightly higher, and the medium and short moving averages are both heading lower. But the moving averages, well, they are both all three are in the right order. So I'd pay attention to it accordingly. Thus, look at the immediate directions that the moving averages are heading, which is bearish, though not overwhelmingly so. And then look at the count. By this I mean that approximately 15 to 20 sessions after the crossovers, we may see significant volatility. So that would be approximately between the 9th and the 16th of December. That's something to put in your diary, but please be aware this is an imperfect bow tie formation. LME 3-month aluminium. The lack of a weekly key reversal here 2 weeks ago, after a tumultuous week in many markets, seeing instead a settling for a lesser outside week pattern, fed through to the big move down and big move up 2 weeks ago that sees prices back where they were today, roughly where they finished 3 weeks ago. We nevertheless initially saw a follow-on lower to the outside week pattern, with prices moving down through some significant levels, all the way down to the support afforded by the slowly rising medium moving average, currently at 24.95, where the decline stopped dead and turned back up 2 weeks ago. This drop lower achieved two things. Firstly, prices reached down to the target, down at 24.98 for the secondary, harder to reach break below the October to early November bull channel, which was satisfactory. Secondly, it set up, as I pointed out 2 weeks ago, it set up with still most of this week to go. It set up the conditions for there to be a monthly key reversal here in November. Thus, if at close of business this coming Friday, the 29th of November, we should close either over 26.26 or under 26.05, then we'll be on. Anything in between will have the lesser outside month pattern. Right now, we are looking at an outside month. It's a narrow band, but we're in it. So, to the overall picture, and prices now are still being held within a number of patterns, mainly bullish. In the big picture, we have the purple tines of the mid December 23 to late July this year bullish Andrews pitchfork. We're currently in between the middle tine above, currently at 28.13, and the lower tine below, currently at 24.55. We also have for the same time period a bright red shallowly bullish shift pitchfork. The market today is a little above the slowly rising middle tine, currently at 25.74. Finally, sitting closer to home, we have a dark blue late July to early September bullish shift pitchfork, pierced above and below, but seemingly still operational. Prices are in between the overhead dark blue rising middle tine, currently at 26.88, and the dark blue lower tine below, currently at 25.56. LME 3-month lead. 3 weeks ago, I detailed a number of supports below the market at the time, as well as a resultant move. That is still all very significant now, and I quote, "Some of the supports below, some of them well below, Fibonacci-based congestion and otherwise, between 1994 to 2002, followed by the June 23 low at 1976, which looked, how shall I put this, less interesting. Then the 2024 lower in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also a neckline extension, that's currently at 1934, of the July 23 to February 2024 head and shoulders continuation pattern. And the reason I mention these supports below is that they contributed in eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards." End of quote. Okay, so back in the middle of October, prices tramped around, but late 5 weeks ago broke down. 2 weeks ago, the market broke even lower as well. And as I quote, the Fibonacci-based congestion otherwise between 1994 to 2002, followed by the June 2023 low at 1976, end of quote. All the way down to just short of the neckline extension, currently at 1934, of the July 23 to February 24 head and shoulders continuation pattern, where we halted and did a small pullback upwards, which has even extended to the start of this week up over the Fibonacci and otherwise congestion between 1994 to 2002. In the process of heading low, the market had reached down to the target at 1980 for the recent bearish halfway hesitation. Now, I also said the following 4 weeks ago about such a move, and I quote, "That is not all, as if we do get down there and continue, then please be on the watch out for 2 bearish and 1 bullish possibilities." The action from August to date could then be seen as a possible large bearish cat's ears pattern, or even an even larger early July to date bearish halfway hesitation. Alternatively, it could then be an opportunity for a mid-July to date triple bottom. This is all getting very interesting. Now, that's the end of the quote. So, we are today quite possibly still on the cusp of seeing which way the market will go, with 3 potential patterns. If we start moving further higher, up to test the green short medium moving average, currently at 2054, or the declining mauve medium moving average, currently at 2057, then we may well have a triple bottom. But if we start once again testing lower, and then succeeding in moving lower, say below the neckline extension below the market, then we could well have a large bearish cat's ears pattern, or even an even larger bearish halfway hesitation. I continue to say, it's all becoming very interesting.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.